Jesse Livermore, perhaps the greatest speculator who ever lived, once said something that changed my entire trading career. The most profitable business in the world is speculation, provided you know what you are doing. And the most ruinous pursuit is speculation, provided you don't. Those words contain the secret that separates the 5% of profitable traders from everyone else struggling in the markets. Have you ever watched a stock explode 50%, 100%, even 200% upward while you sat on the sidelines, wondering how you missed such an obvious opportunity? What if I told you that the most successful traders in history saw these moves coming long before anyone else? Not through insider information or complex algorithms, but through a disciplined approach that anyone can learn. Has this ever happened to you? You enter a trade, take a small profit, only to watch in horror as the stock continues climbing without you, leaving thousands of potential dollars on the table. Or perhaps you've found yourself jumping frantically from one hot tip to another, always ending up buying at the top and selling at the bottom. What you're about to discover might surprise you. True speculation isn't about excitement or gambling on the next big thing. It's a disciplined practice, almost boring in its methodical approach, that requires patience few possess in today's instant gratification world. While everyone else is chasing quick profits and overnight riches, the real fortunes are being built by those who understand how to identify major market trends before they become obvious to the crowd. Stay with me until the end of this video, because I'm going to break down exactly how Livermore spotted explosive trends before anyone else. This isn't about complex technical indicators or reading financial statements. It's about understanding the psychology of the market and recognizing certain patterns that occur over and over again. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the globe. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Think of yourself as a hunter stalking your prey. The amateur rushes through the forest, making noise, chasing after every rustling leaf. But the professional, they sit silently, watching, waiting for the perfect moment when their target presents itself. In the market, this patient, methodical approach consistently outperforms the frantic gambling that most call trading. The real money, life-changing money, isn't made by catching small price swings or scalping pennies. It comes from identifying major market movements early, having the courage to establish a position when others are still blind to what's developing, and then having the even rarer discipline to hold on while that position grows into something substantial. What I'm about to share with you revolutionized my own trading, turning years of frustration and mediocre results into consistent profitability. And the most remarkable part, these principles work in any market, in any time frame, whether you're trading stocks, crypto, forex, or commodities. What most traders never realize is that the market operates on a fundamental truth that goes against our basic human instincts. We're wired to seek immediate gratification, to take that quick profit when we see it. But this mindset creates a ceiling on your potential transformation as a trader. Let me share a hidden truth that changed everything for me. The big swing pays, and nothing else. I spent years trapped in the cycle of taking small profits, only to watch in frustration as those same stocks continued climbing without me. The revelation came when I studied the accounts of the wealthiest traders in history and discovered they all had one thing in common. They didn't make their fortunes on dozens of small trades. Their wealth came from a handful of massive positions they identified early and held as they blossomed into life-changing returns. This approach requires a complete mindset shift. Instead of celebrating a quick 5% gain, you need to develop the patience to hold positions that have the potential to deliver 50%, 100%, or even more. Think about this for a moment. Would you rather make 20 trades with 5% gains, constantly paying commissions and taxes, or make 3 trades that each return 50%? The math isn't even close. Now, I want to go even deeper into understanding how these explosive market moves actually begin. The most significant insight in my trading journey was realizing that major market movements start quietly, without fanfare or headlines. By the time CNBC is talking about a stock, or your neighbor is giving you tips about it, you've already missed the most profitable entry points. Professional traders develop an almost sixth sense for detecting these early signals, subtle changes in volume patterns, price action that diverges from the broader market, or institutional accumulation that happens under the radar. These aren't mystical abilities. They're skills developed through dedicated observation and experience. The decisions you make in these quiet early stages will determine whether you're buying near the bottom of a trend or chasing it after it's already made its big move. If you're serious about mastering the art of spotting explosive market trends before anyone else, hit that subscribe button now. I share these powerful trading insights that most gurus keep to themselves. Think of it like this. When a volcano is about to erupt, there are warning signs that most people miss. Small tremors, changes in ground temperature, subtle shifts in gas emissions. Only those who know what to look for can spot an eruption before it happens. The market works exactly the same way. There are always signals before a major move, but they're invisible to the untrained eye. What separates the amateur from the professional isn't intelligence or resources, it's the ability to recognize these early warning signs and the courage to act on them when everyone else sees nothing happening. This is where the real edge exists in trading, in that quiet space before the crowd arrives. The most fascinating part of this approach is how it impacts not just your trading results, but your entire relationship with the market. You'll find yourself becoming calmer, more patient, more observant of subtle shifts that others miss entirely. Drop in the comments, "I see the signals," if you've ever noticed a stock making unusual movements before a major announcement or trend change. One of the most profound revelations in my trading journey came when I finally understood a simple truth that Livermore emphasized. The price never lies. All else is noise. We live in a world of constant information bombardment. Financial news, expert opinions, tips. From friends, social media buzz, all claiming to give you the edge in the market. But here's the uncomfortable truth. Nearly all of it is designed to distract you from the only thing that matters, what the price is actually doing. Think about this paradox for a moment. The financial media industry exists to keep you engaged, watching and clicking. Their business model depends on creating narratives that seem urgent and actionable, but the authentic language of the market isn't spoken through CNBC. Headlines or Wall Street analyst reports. It's written directly in the price action itself. When you learn to read this language fluently, you'll see the market's intentions with remarkable clarity, often days or weeks before the news catches up to explain why a move happened. This mindset shift is liberating once you embrace it. Instead of frantically consuming every piece of financial news, trying to stay informed, you develop a Zen-like focus on the only reality that matters, how prices are behaving. Is a stock holding steady despite negative news that's telling you something important? Is it failing to rally on supposedly good news? That's equally revealing. The price pattern never lies, even when everyone else is trying to convince you otherwise. Now, I want to go even deeper into understanding the psychological barriers that prevent most traders from capturing these big moves. The market has a fascinating way of testing your character and revealing your deepest insecurities. One of its most effective traps is the illusion that constant activity equals progress. Our culture celebrates hustle and grinding, but the market operates on a completely different value system. It pays you for patience and courage, not for how many trades you make. This runs counter to our basic psychological wiring. When the market is quiet, most traders grow restless. They feel an almost irresistible urge to do something, anything, to feel productive. But this is precisely when the discipline of inaction becomes your greatest asset. The true professionals understand that capital preservation during quiet periods is just as important as capital deployment during opportunities. They're like skilled hunters who can remain perfectly still for hours, conserving energy, waiting for the perfect moment to strike. What most beginning traders never discover is that overtrading during uneventful market periods is the silent killer of accounts. Each unnecessary transaction chips away at your capital through commissions and small losses, leaving you undercapitalized or emotionally exhausted when genuine opportunities finally emerge. The behind-the-scenes reality of successful trading often looks boring from the outside. Long periods of watchful waiting, punctuated by moments of decisive action. If you've ever felt that inner tension between the desire to be active in the market and the discipline to wait for ideal setups, type "patience pays" in the comments. It's the acknowledgement that sometimes the hardest work in trading is doing nothing at all. Now let me share something that completely transformed my approach to spotting explosive market trends. While most traders are fixated on indicators, news cycles, or complex chart patterns, the true masters focus on three fundamental elements: price action, volume patterns, and the character of price movements. This trinity of market behavior reveals the invisible forces driving stocks long before they make headlines. Think of yourself as a detective investigating a crime scene. The price action is your primary evidence. How a stock responds to support and resistance, the way it behaves after news releases, whether it's making higher highs and higher lows consistently. Volume is your witness testimony. Is smart money quietly accumulating shares or distributing them? Are volume spikes confirming price moves or contradicting them? And the character of price movements, the personality of the stock, tells you about its underlying strength or weakness. What fascinates me about this approach is how it shifts your perspective from being a passive market participant to an active observer of human psychology playing out through price. Behind every chart is a battle between fear and greed, between conviction and uncertainty. When you study these patterns deeply enough, you begin to recognize the footprints of institutional investors, the smart money that moves markets, long before retail traders catch on. The revelation that changed everything for me was asking better questions. Who is buying? Who is selling? Why now? What does this tell me about the underlying conviction behind this move? The crowd never bothers with these questions because they require patience and depth of thinking. They prefer to react to headlines and emotions, which is precisely why they consistently end up on the wrong side of major moves. Now, I want to go even deeper into the most challenging mindset shift required for trading success. Perhaps the most difficult truth for many traders to accept is that the market is never wrong, only opinions are. This single principle has the power to completely reshape your relationship with trading. When a stock doesn't behave as you expected, the natural human tendency is to blame the market. This should be going up based on these great earnings, or this valuation is too high, it has to come down. But here's the humbling reality check. The market doesn't care what you think should happen. It moves according to its own internal logic, reflecting the collective decisions of millions of participants with varying timeframes and objectives. Fighting this truth is the fastest way to destroy your capital and your confidence. The moment you realize that your opinion is irrelevant compared to what price is actually telling you, a profound shift occurs in your trading psychology. This surrender to market reality isn't weakness. It's the ultimate strength. It allows you to adapt quickly when you're wrong, instead of stubbornly holding losing positions. It teaches you to align yourself with the prevailing forces rather than battling against them. Have you experienced that moment of clarity when you finally stopped fighting the market and started listening to it? Type market wisdom in the comments if you felt that powerful shift in your trading journey. One of Livermore's most profound insights, and the one that took me years to truly internalize, is that it's not thinking that makes money in the markets, it's sitting tight. This revelation contradicts everything we're taught about success in modern society. We've been conditioned to believe that constant action, hustle, and intensity lead to greater rewards. But the market operates by entirely different rules. The transformation happens when you realize that after identifying a major trend and taking a position, your most valuable skill becomes the ability to do absolutely nothing. This is where most traders fail spectacularly. They enter a position correctly, see it start to work in their favor, then sabotage themselves through overanalysis, second-guessing, or impatience. The psychological burden of sitting through normal market fluctuations becomes unbearable. What I discovered through painful experience is that the market deliberately tests your conviction with shakeouts, false moves, and periods of frustrating consolidation. These aren't random events. They're the market's way of transferring wealth from the impatient to the disciplined. The moment you recognize this hidden truth, you stop seeing volatility as something to fear and start seeing it as the necessary price of admission to extraordinary returns. Join our community of disciplined traders by clicking subscribe. I'm committed to bringing you the timeless wisdom that transformed my own trading journey from frustration to consistent profitability. Think about it this way. The biggest winners in market history weren't the most active traders or the ones with the most sophisticated analysis. They were the ones who could identify a genuine opportunity, establish a position, and then demonstrate the rare fortitude to hold through all the noise and fluctuation until the move fully matured. This patience is the rarest skill in trading because it goes against our hardwired desire for immediate feedback and constant stimulation. Now, I want to go even deeper into understanding why these patterns work so reliably across different market eras. There's an illuminating quote from Livermore that fundamentally changed my perspective. There is nothing new in Wall Street. What has happened before will happen again and again and again. This isn't just a clever observation. It's the key to developing market foresight. The most liberating realization in my journey was understanding that behind all the technology, financial innovation, and changing market structure, the same basic human emotions drive price action today as they did 100 years ago. Greed, fear, hope, and impatience haven't evolved. They manifest in identical patterns across every market cycle. The costumes and settings change, but the play remains the same. This continuity gives the student of market history an almost unfair advantage. When you study historical market cycles, bubbles, crashes, and recoveries, you develop a mental catalog of patterns that allows you to recognize the current market environment for what it truly is. While most traders are caught up in the narrative of "this time it's different," the historically informed trader sees the familiar emotional footprints that have preceded every major move. The impact of this historical perspective is profound. It gives you the confidence to act decisively when others are paralyzed by uncertainty. If you've noticed these repeating patterns in your own trading experience, type "history rhymes" in the comments. I'm curious how many of you have recognized these echoes from the past in today's markets. Now let me share a controversial truth that changed everything about how I process market information. Most traders believe gathering more tips, stories, and opinions gives them an edge. But I discovered the exact opposite is true. Tips and stories aren't just useless noise, they're actively dangerous to your trading results. This revelation was uncomfortable, but ultimately liberating. Think about what happens psychologically when you hear a compelling market narrative. Perhaps it's an analyst on CNBC making a convincing case for a stock, or a friend sharing their sure thing investment. Once that story takes root in your mind, a fascinating transformation occurs. You begin unconsciously filtering all market information through that biased lens. Contradictory signals get dismissed, while anything confirming your pre-existing belief gets amplified. This cognitive blind spot creates a prison for your decision-making. I've watched brilliant traders destroy their accounts because they fell in love with a story and couldn't see the objective reality unfolding in the price action. The market might be screaming danger through declining volume or failed breakouts, but the narrative in their head drowns out these critical warnings. The awakening comes when you realize that stories are designed to make sense of the past, not predict the future. True professionals understand this hidden truth and develop an almost monastic discipline to ignore the constant barrage of market narratives. They focus exclusively on what the market is actually doing, not what someone says it should be doing. This doesn't mean becoming ignorant. It means developing the discernment to separate actionable information from entertaining noise. Now, I want to go even deeper into understanding the sequence of how major market moves actually develop. This insight completely reshaped my approach to timing entries. There's a predictable pattern to how explosive trends unfold, and knowing this sequence gives you an almost unfair advantage in positioning yourself ahead of the crowd. The journey of a major move follows a consistent path. First, insiders with genuine knowledge begin accumulating shares quietly, with minimal price impact. Then, professional traders, who study volume patterns and subtle changes in market character, recognize this accumulation and begin establishing positions. Only after significant price appreciation does the news become public and the story reaches the financial media. By this point, professionals are already sitting on substantial profits. The final stage, where most retail traders enter, is when the stock makes headlines and everyone is talking about it. This is precisely when professionals are distributing their shares to enthusiastic latecomers. Understanding this backstage sequence creates a paradigm shift in how you view market information. The professionals aren't lucky or psychic. They've simply learned to read the early signals that most traders overlook. What fascinates me is how this pattern repeats with remarkable consistency across different markets and time periods. Whether it's stocks, cryptocurrencies, or commodities, the psychological stages of accumulation, markup, distribution, and markdown reflect the unchanging nature of human emotion. If you've noticed this pattern playing out in stocks you've watched or traded, type "ahead of the crowd" in the comments. I'm curious how many of you have observed this sequence unfold in real time. Let me share a counterintuitive discovery that completely shifted my perspective on trading psychology. We often celebrate decisive action and bold moves in the market, but the true challenge, the part that separates amateur traders from professionals, isn't pulling the trigger. It's having the discipline to wait for the perfect setup. This revelation transformed not just my trading results, but my entire relationship with the market. Our culture glorifies action and decision-making. We admire the bold entrepreneur, the decisive leader, the person who makes things happen. This cultural bias seeps into our trading psychology, creating an almost irresistible urge to be constantly active in the markets. We feel productive when we're placing trades, analyzing charts, and managing positions, and strangely unproductive when we're sitting still, even if that stillness is the most profitable choice. The enlightenment comes when you realize that the market doesn't reward activity, it rewards accuracy. Trading isn't about how many positions you take, It's about how right those positions are. I've witnessed traders with remarkable talent sabotage themselves through impatience, forcing trades during suboptimal conditions simply to satisfy their need for action. Meanwhile, the most consistently profitable traders I know might go weeks without placing a significant trade, waiting patiently for that rare confluence of factors that creates an exceptional opportunity. This patience isn't a passive trait. It's an active discipline that must be consciously developed. The voice of impatience will always be there, whispering that you're missing out, that you need to do something. That opportunity is slipping away. Learning to quiet that voice is perhaps the most valuable skill you can develop as a trader. Now, I want to go even deeper into understanding the nature of this waiting period. The breakthrough insight for me was realizing that waiting is not idleness, it's active watchfulness. This distinction completely reframes how you experience those periods between trades. Far from being empty time, these intervals are filled with some of the most important work you'll do as a trader. During these waiting periods, you're engaged in intense market study, observing how stocks react to news, noting volume patterns, watching how leaders in various sectors are behaving. You're building a mental map of market conditions, identifying the path of least resistance before committing capital. This watchfulness requires tremendous focus and discipline. It's mentally taxing in a way that many traders don't appreciate until they've mastered it. Think of it like a wildlife photographer waiting for the perfect shot. To an outside observer, they might appear to be doing nothing, just sitting motionless in a blind for hours. But in reality, they're intensely engaged, observing subtle changes in their environment, noting animal behavior patterns, preparing equipment, and staying perpetually ready to capture that decisive moment when everything aligns. This is the mindset of the professional trader during periods of watchful waiting. What's fascinating about this approach is how it completely inverts the traditional metrics of productivity. Instead of measuring your success by how many trades you make, you begin evaluating yourself on how effectively you can wait, how disciplined you are in preserving capital during suboptimal conditions. Have you experienced this paradigm shift in your own trading journey? Type "watchful waiting" in the comments if you've discovered the power of patient observation in your market approach. Now we arrive at what might be the most critical inflection point in a trader's journey, the moment when patience transforms into decisive action. After all that disciplined waiting, watching, and studying, a genuine opportunity finally presents itself. This is where the true test of character begins. When the signal is clear, you must find the courage to act with appropriate boldness. This moment of decision reveals more about your trading psychology than perhaps any other aspect of the process. What I've observed repeatedly in my own development and in mentoring others is a fascinating paradox. Many traders can correctly identify the same setups and opportunities. They've done their homework, developed their watchfulness, and can see the pattern unfolding. But when the moment arrives to commit significant capital to truly back their conviction, something remarkable happens. A subtle but powerful form of self-sabotage emerges. The watershed moment in my trading journey came when I realized that identifying opportunities wasn't my problem. It was having the nerve to back those insights with proper position sizing. I would spot a perfect setup, take a tiny position as a test, watch it work exactly as anticipated, and then feel the profound regret of knowing I should have committed more capital. This revelation was both painful and liberating. Behind this hesitation lies a complex web of psychological barriers: fear of loss, fear of being wrong, imposter syndrome, and even paradoxically, fear of success. These invisible barriers separate those who consistently capture significant profits from those who merely survive in the markets. The breakthrough comes when you develop the internal fortitude to act with conviction proportional to the opportunity. Not recklessly, but boldly enough to make the victory meaningful when you're right. This courage isn't about gambling or taking unnecessary risks. It's about having the emotional resilience to back your highest conviction ideas with appropriate capital. The market has a remarkable way of testing your resolve by presenting its best opportunities in the midst of uncertainty, fear, or market turmoil, precisely when most traders are too paralyzed to act. Now, I want to go even deeper into the fundamental truth that ties everything together. The most illuminating insight from Livermore's wisdom, the one that explains why so many brilliant people fail in the markets, is that speculation is about character, not brains. This perspective completely reframes what trading mastery truly requires. Our educational system trains us to believe that intelligence, analytical ability, and technical knowledge are the primary determinants of success. But the market operates by different rules. I've watched mathematical geniuses, PhDs, and brilliant analysts consistently lose money, while traders with average intelligence but exceptional character traits build fortunes. The market doesn't reward cleverness. It rewards the rare combination of patience to wait for the right opportunity and courage to act boldly when it arrives. These qualities aren't intellectual. They're deeply rooted in character. This explains why trading success can't simply be taught through books or courses alone. It requires a journey of personal development that challenges and transforms your relationship with uncertainty, risk, and your own psychological tendencies. If this perspective resonates with your own experience, that your greatest trading challenges aren't technical but psychological, type character over intellect in the comments. I'm curious how many of you have discovered that your trading journey is ultimately about developing yourself rather than just developing your market knowledge. What we've explored together today isn't just trading theory. It's a philosophy that can transform how you approach the markets and perhaps even life itself. Livermore's wisdom has stood the test of time because it speaks to the fundamental truths about human psychology that never change. I hope you found value in these insights about spotting explosive trends before they become obvious to everyone else. Remember, the journey of mastery in trading isn't primarily about technical indicators or complex systems. It's about developing the character traits of patience and courage that few possess, but that the market consistently rewards. If you resonated with this approach to trading, this focus on catching the big moves rather than the constant noise, I'd love to hear from you. Type "big moves matter" in the comments if you're committed to developing this patient, disciplined approach to the markets. And if you found this perspective helpful, hitting that like button lets me know to create more content diving deep into these timeless trading principles. Your engagement truly helps guide what topics I explore next. I believe we're all on this trading journey together, and there's so much more to discover. I've actually created a follow-up video right here that expands on these principles by showing specific chart examples of how these explosive trends develop. Click it now and join me there as we continue exploring how to spot these life-changing market moves before the crowd catches on.